The best and the worst trades in 2024. What did we learn with that? What are the key elements that we're going to be taking from those trades into 2025 to take BGS 20 strategy even to a next level? Strategy that we use together with our VIP members to lock 20 to 40% profit within 1 to 3 month time. Let's have a look. My name is Les, I'm Chief Analyst of BG Trading Australia. Today is 27th of December 2024 and I hope you had an amazing Christmas. As the market is open, we are here working. At least one of us, which is me, working today. And we're going to be working through every single day the market is open, providing great service to our VIP members. Now, let's look into the first stock, in fact, the most profitable stock, and try and understand what are the key elements that we used by the time we bought the stock, and most of the analysts was recommending to sell and not to touch. And what made us execute that trade? What made us buy that stock? Let's take a look. Let's start with Zip. If you've been following us long enough, you know that Zip has been incredibly profitable for us. In fact, Zip has been the most profitable stock ever at the history of BG trading. We've been trading Zip over and over again since 2020 when we founded BG Trading VIP membership program. And we started this time trading with Zip at 38 cents. That was back in 2023, right? And then we closed the trade in 2024. But I want to go back in 2023 and try to understand why we bought Zip. What made us to decide? If you go back into later 2023, and the first thing we looked into Zip was the fact that the chart formation has indicated a potential change of behavior. The stock was falling remarkably, has actually fell from $14 in 2021 all the way to 28, 22 cents, something like this. But then was trading right a few cents, and then all of a sudden we realized there was a incremental volume coming up into this stock and a potential change of behavior. When I'm talking about change of behavior, I'm saying that the pattern, the trend has given us some signal of reversal. And this is a classic signal when we have a multiple lower lows and lower highs, and all of a sudden there comes with a bullish intersection level 1 and level 2, which one of the BG trading key indicators, and a strong volume start popping up all of a sudden. Then this is from the technical aspect, stock trading at technically discounted price for the long term, also for the short term, but also strong signs of reversal. Then the second thing we did into what we call multi-dimensional trading approach, we went to look what's happening with the fundamentals, and it turns out Zip was improving its EBITDA. In fact, by that time, I think it was the second or the third consecutive quarter that Zip was reporting profitable EBITDA. Even though EBITDA is not the best indicator, we really want to look into net profitability, we knew that Zip was still going to turn into net loss. But as the EBITDA is the first indicator, fundamental indicator showing that the company was potentially turning around, so we thought, let's take a position in this, and then we combined with the third element of our multi-dimensional trading approach, which is a macroeconomic. So as interest rates have peaked in the US, so we had the pivot of interest rates cycle, then the market start tipping for interest rate cut in 2024. That was exactly what happened. Took a little longer, but that was exactly what happened. And remember this, market tend to price macroeconomic events right in advance, 6 to 12 months in advance. So we saw that and we thought this could be the time which we want to position ourselves in this trade, in this particular stock. And then obviously the stock went up all the way to 70 cents. Then we lock our first trade 80%. Then we entered again at technically fair price for the short-term trend or moving average, and we made another 50% trade profit. Then we bought it again right here at the top around $1 for another trade. But look at this, we have since we have this confirmation of reversal, ZIP has behavior into a bull trend and has taken a bull trend since November 30th, technically. So we're talking about now not only 12 months, but 14 months now, pretty much, of uptrend. And as you can see, the trading behavior showing a multiple higher lows and also higher highs. Essentially, that means that people lock profit at a higher level than they would be locking before and buying back into the stock, like traders, into a higher level than it was before. And that pattern has continues all the way until December, early December this year, which we have highlighted here in the channel that that we could have a reversal trend right here. Okay, even though ZIP is up today at $3. So just a red flag there. And our last trade, which we bought at $3, we decided to close our position at minimum profit. We still did a little bit profit. We closed around $3.10, and then we closed it again just under $3, just so we locked our we wouldn't lose any of our profit done in 2024 and move into different stocks, different sectors. That's what we done with ZIP. So ZIP was one of the greatest trades that we have done in BG trading, especially this year. So do we think ZIP will recover? Well, it has gone. It's still at trading what we call formal level here, right there, formal level. If you ask me, where would I be comfortable buying ZIP again? I know a lot of people laughed there, but they laughed when we bought at 38 cents. Okay, so I would say this: I would love to buy ZIP at $1.80 at the long-term moving average. That would be a fair price to enter into a position with ZIP right now. Another thing, another red flag that we have here, and that comes from macroeconomic outlook for 2025. Things might be changing here because now we have Donald Trump won the election, and he will probably raise tax from imports in the US and protect its economy, and that could bring inflation back. Inflation means high interest rates, so we could see Fed potentially even hiking rates once again in the US. What does it represent for us here in Australia? And I regret to say this, but I'm afraid that we could even miss out this interest rate cut cycle that we have seen in many countries around the world. Unfortunately, that could happen. That could be a reality. And I feel pity for mortgage brokers because I hold a lot of mortgages as well. But one thing I learned, rather than be pity about things, we should just try and make more money somehow and not to worry about things, not trying to worry about things, but position strategically to take advantage. And that's what we're going to be doing with BG trading moving forward to 2025. 2025. We're going to use the assumption that we might US may be done with interest rate cut, and we're going to be cautious about, especially in growth stocks like Zip, Cesar, and other growth stocks, and obviously take advantage into stocks that could even benefit of interest rate on hold or even interest rate hikes. We have to be very carefully looking what's happening with the US economy in the next few months. And obviously, unemployment data and inflation data will be the key indicators. So I think the market will start focusing again into inflation data in US. Same happened early 2024. So these are the key elements that we took from this trade in with Zip. Buying stocks at technically discounted price that are highly undervalued with strong fundamentals, at least strong fundamental outlook, with macroeconomic outlook that could directly benefit their particular sector and ultimately their particular company. That's what we did with Zip. Now, the other one I want to share is we did Block as well, 62%. So we bought Block around $90 or right there. And the reason we bought Block and the money we used to buy Block was money that we profit from Zip. And I said that to our VIP members, even in the channel here, I said that Block was relatively undervalued in comparison to Zip. Obviously, Block is a company that has many other business, not just a buy now pay later company. Buy now is only a part of the company's business portfolio, but Square was highly undervalued around $90, but we needed to see some technical breakouts, and that was exactly what we speculated there. We bought Square at technically discounted price around $95, and we speculate a breakout upon the fact that RSI was showing a bullish divergency, and also we had a higher lows right there and a higher high. And we thought this could be a change of direction, and that was exactly what happened. So long short story, we locked 62% profit together with our VIP members. And if you're a VIP member and you did trade Square with us and Zip, please put in the comments below. I did trade Zip and Square using BGS20 strategy. That will help us as well to know how many people we actually been helping out with our strategy. Okay, now the key element for Square in comparison to Zip is that Square again has a multiple different businesses, and I believe if you're going to ask me here if you can buy Square or Zip right now, I would be all the time buying Square at the current price and the current chart formation, because both stocks are trading at the formal level now. Obviously Square is more at the formal level than Zip. Zip's at the technically discounted price for the short term, but because Zip is only buy now pay later, in Square is actually improving its profitability as well, and could escalate its profitability far better, far greater than Zip. I could see a further upside, even potentially see Square going towards $170 a share. Okay, another thing I heard a lot of people saying is, I don't want to buy Square, for example, or Macquarie Bank or Commonwealth because they're too expensive. This makes absolutely no difference, guys. Absolutely no difference. So the thing is, stock can go up 20% if it's cents, can go up 24 cents if it's worth like $100. It doesn't really matter. What matters is how macroeconomic outlook will affect on that particular stock, whether the stock is trading at entry level, and whether the company's fundamental is improving within the next 6 to 12 months. That's what we want to be looking at, not the price. The price doesn't really matter if it's $100 or if it's $1. It makes no difference. Okay. Now let's look into the third stock that was incredibly profitable for us this year, which is Mesoblast. So we traded Mesoblast multiple times. In fact, we started trading Mesoblast at 50 cents. And the reason we did is because, first of all, we had really strong fundamental input that the market will be looking at was for Mesoblast to lodge its biologic application for one of the key treatments in 2024, and Mesoblast managed to do that successfully. So the market reward that, and then took the stock from 50 cents, even lower, like 34 cents, into $1 level. So once the $1 level was broken right here, that's where we start trading Mesoblast multiple times. So we traded actually 3 times Mesoblast at around $1 level together with our VP members for the same target, 129, which would give us giving or taking 29% profit. So then the last trade, we bought Mesoblast upon this, the breakout of this, which once was a resistance level and became a support level. We bought Mesoblast around $1.35, and then we held it through the FDA approval. Then that's when we had the huge reward, which we sold half of our positions at just under $2 and the other half at $2.50. And then we've been doing some intraday trades here with some of our VP members right there. Even though this is not a part of service, we do sometimes a little bit of intraday if we see an opportunity, okay? So that's Mesoblast, Zip, and Square, 3 stocks that helped us. We did the best trades. Also, there's another one which I'm not gonna go in the details, which was Appen. Okay, I'll leave Appen for another video, which, by the way, showing a constructive formation right there, but I will leave for another video. Let's talk about the biggest loser. The biggest losers, unfortunately, was DroneShield, and I'm going to be sharing the biggest mistake we had. So we bought DroneShield around $1.10, and then the stock went up a little bit, reach our target. So we actually done a profitable trade of about 35% with DroneShield. Then we decide to buy again. That's when things went wrong, okay? Because there was a change of behavior right there, double top type of thing. But we bought anyway, and never reached our target, and they start coming down right there. We had the stop loss around 97 cents. That's what we had. It was about, this one was long, like not as tight stop loss, was about 18%. And then rather than selling this stock, we decide to buy a little bit more. Classic mistake. Okay, we thought $1 would hold and didn't hold, and went down all the way to 80 cents, which we decided to take a loss. We took a loss at 80 cents. Unfortunately, for anyone that kept holding DroneShield, it went down all the way to 60 cents. Okay, and then it's bouncing a little bit right there. Now, you might ask, is this a good entry opportunity? I would say, based on the chart formation, yes. But the problem is, what did we learn with DroneShield? First of all, we have to follow the strategy at all times. We do 9 out of the 10 times, but DroneShield was something that we really thought that was going to go up, as DroneShield's pulling new contracts with NATO and governments and other institutions. So we thought, okay, that will be eventually bounce back, but didn't happen until 60 cents, which was a strong multi-year support level right there. What did we learn with DroneShield? For stocks that are overvalued, we really need to stick with strategy. And DroneShield was remarkably overvalued, over $1. Now, when we're talking about a stock that is fundamentally and technically undervalued, then that's fine. We might can hold a little bit longer because we know that most of the time there will sooner or later the market will buy back. But in this case, DroneShield was fundamentally overvalued. And I even put that on the risk assessment that we did when we bought DroneShield. But the problem with DroneShield really was overvalued, and it kept breaking into different support levels. Once the support is broken, then it most likely the stock will fall to the next lower level, I would say. So biggest mistake, buying stock that is fundamentally overvalued to take advantage of the hype of the market, but if the hype doesn't happen, hold longer than ideal would like to. So we had to cut loss at 80 cents. We're still now trading under our stop loss. Unfortunately, obviously, like anything, we learned with that. And the key thing for 2025 is if we buy speculative stock or stock that is overvalued fundamentally, so we just cut the loss, we just stick with the stop loss and no negotiation. That's what we're supposed to be doing at all times for stocks that are overvalued. Another stock that we took stop loss, and that was recently, was Liontown Resources. Lithium. In fact, lithium has been underperformed. Everyone knows that lithium price is still pretty low, but we thought that we would have a double bottom formation right there. But this was a very good, actually, very good stop loss because we bought around 62 cents and the stop loss at 58 cents, still trading under the stop loss. There was just a small loss in that. The biggest loss we had was really DroneShield. All the other losses that we do is quite narrow. And the fact that it's quite narrow not only protects the capital, but also allows traders to buy the same stock at the lower level after that. But like anything, every time we see a bounce and the stock is trading at technically discounted price, there's nothing wrong to speculate a potential reversal, all right? Even though it's better sometimes to wait for a double bottom, this wasn't really a double bottom, was actually a breakout of the support, and we could see now Liontown even moving further down, unless obviously lithium prices bounce remarkably, which doesn't look like it's gonna happen anytime soon, right? Is there any value in Liontown at the moment? Yes, long-term value, absolutely. But short-term, and that's what we do here, 1 to 3 months time, better take a loss. That's what we did, and move on. That's what we're going to be doing. Another stock that we took stop loss was Pilbara, another lithium stock. Unfortunately, Pilbara was trading a sideways, which we thought about buying upon this reversal here, but there was exactly the same breakout right there of this so multi-year support level 240. So stop losses right under. Also not a significant loss, but again we knew that we would be buying a stock in a downtrend, and when we buying stock in downtrend, stop loss is non-negotiable. Stop loss is a must. That's what we'll be taking to 2025, and that's what we're going to be looking to the new trades, is always taking stop loss position if stocks is overvalued or is in downtrend. Also taking positions into stocks that has been oversold, stocks that is offering incredibly good fundamental value, and into a favorable macroeconomic outlook. 3 key elements that we are taking into 2025, and we are going to follow those rules in order to protect our capital and making even better trades that we done in 2024. Thank you very much for watching, guys. Hope that was valuable. Let us know what you think, and I'll see you in the next video. Thanks.